I hope all this technology things work. Quite some people here in the panel are currently on holiday, and therefore we hope that the connection holds. With this, I would like to directly hand over to the panelists, and today we would like to talk about decentralized finance, especially with the sub focus of asking where are we coming from, where are we going to, and here we would like to also focus on whether DeFi will meet institutional finance at some point of time, or whether it will remain a domain for retail investors and so on. And with this, I would just directly hand over to Philip. Now, please introduce yourself briefly as a person, but also give some context of your company, because it's always important to know who's speaking to us, what's the context, what's the background, and so on. Philip, please.
Sure. So I've been a serial entrepreneur, technology entrepreneur. I spent around about 10 years in Silicon Valley, made my way back to Germany 3 years ago. I kicked off a project called Swarm Fund in 2017, which became one of the sort of security token focused projects out there. And then sort of with going back to Europe, we started to focus on sort of solving for liquidity. And had engaged in different jurisdictional environments and have now launched Swarm Markets just a couple of weeks ago, with the goal of building the first sort of regulated and licensed liquidity protocol, which smells and feels a little bit like Uniswap with onboarding, but gives a huge amount of other options to embed other assets and add other elements to the DeFi puzzle that we are all trying to solve here.
Excellent. So you could mention this as a specialized institutional protocol with required onboarding. We will dig into this later on. Maybe let's move on to Fabian Kroll. Please also present yourself briefly.
Yes, hi. Hi, everybody. I'm Fabian. I have been in the consumer banking sector as an advisor for around 8 years. So I have a very strong view on retail banking so far, and lately have been involved in founding and leading a very young startup where we focus on more or less institutional investors and their way into the DeFi world. So the goal is to lower the barriers, to make the very complex world of DeFi a little bit easier for institutionals, and also go back to traditional metrics and help them benchmarking the DeFi space from a investing point of view. So I have a little bit of both. I can talk on retail investors, and with a newly found startup, I can also give a little bit of a perspective from an institutional point of view.
Excellent. Perfect. Then let's move on to Niels from Switzerland. What about you and your company?
Yeah, hey, hi there. My name is Niels. My background's in traditional finance. I've been trained as a quant. I've been working in the financial industry, done a lot of quant trading projects and so on. I found my way into crypto then in 2017 in the ICO craze. We founded that PAR in 2018, went on the market with a tokenization solution. And are focusing now on DeFi. We support DeFi projects with our expertise. We do development, smart contract development, and so on. So we, we get our hands dirty in the DeFi industry right now. So that's us.
And you're sitting in Switzerland, so you also know a lot what's going on in your environment, right? It's probably the most dense ecosystem.
Right. Exactly. Well, right. I mean, there is a lot of that going on here, and we participate in different working groups. Some of those are more focused on regulatory aspects, and others more on infrastructure and new infrastructure for capital markets here in Switzerland and globally, obviously.
Excellent. Thanks. And Simon, please, up to you.
Yeah, hi everyone. Simon from Cashlink. I'm an expert in asset tokenization, and for my way into crypto in 2016 through personal interest, but also my master thesis. And now I work for Cashlink Technologies, a software company from Frankfurt, Germany. We are a fintech and provide various software solutions around tokenization and blockchain-based capital markets. So our focus is really to provide DLT-based infrastructure for capital markets, and our clients are mainly investment platforms and financial institutions. So we do embed a lot of compliance into our tech, but also in our smart contracts, because the assets that we tokenize are in most cases classified as securities. So there's again a connection between DeFi, but also centralized finance in a way. So yeah, super excited to be part of the panel today and looking forward to the discussion.
Perfect. Yes, excellent. Thanks very much. That's the entire round. And let's now directly dive into the topic. What about the current state of DeFi? Where are we? Where are we coming from? Where are we going to? Will it grow forever? Will it grow into the institutional field? Will it remain in the retail field? Maybe, Niels, would you like to get started on answering this question? Where we are most probably going, especially with the balance of retail at this point of time, primarily retail versus institutional?
Sure, yes. So I think where we are, if you look at DeFi right now, I think we have a fully functioning financial system that runs entirely on the basis of distributed ledgers and smart contract technology. We do have stable coins that represent currencies, right? Stable assets that work entirely driven by algorithms without policy interventions that control the supply and demand of money. We do have lending markets that are based on those stable coins. We do have derivatives markets. We do have exchanges, decentralized exchanges that allow mostly retail customers to exchange tokens one against the other. So we do have a fully built out financial system that has grown in parallel to the existing traditional financial system. And it has grown in parallel because it was able to develop itself entirely without any limitations that the existing or the traditional financial system finds itself in, no regulation, no compliance that it has to adhere to, and so on. So I think that's where we are right now. I also say that we are focused on retail. So I think a lot of the services that one can find in DeFi right now are focused on retail clients, retail customer, retail use cases. And I think at this exact moment where we are right now is DeFi is now evolving or expanding beyond the retail use case and starting to also be embedded into traditional financial services. So we see, for instance, first services that allow treasuries of regulated companies to invest their treasury into at positive interest. So, for instance, looking at the compound offering that they're rolling out, looking at Aves offering for regulated entities to access their lending markets and so on. So that's one area where we see now DeFi expanding more into the regulated world also. And then on the other hand, we also find more and more traditional or real world assets, let's say, that find their way into DeFi in the form of new types of collateral, for instance. So DeFi is still very limited to crypto assets that are used as collateral for borrowing, for building leveraged, investment schemes and so on. And we find more and more assets from the traditional world that are being adopted and voted into DeFi protocols now. So I think what's very excited right now is in this phase of DeFi that DeFi is expanding from, let's say, a very closed system of crypto native users into more of an additional offering that traditional finance is adopting right now. So I think that's what's very exciting, and that's what we will be seeing more in the future, especially in this year, next, and the upcoming years. We will be seeing more of the adoption of DeFi in traditional finance.
I think that was a very good summary. Who would you like to add something? Maybe Philip, you have recently gotten a very important license by the German Financial Market Authority, BaFin, right? So maybe you would like to add some aspects?
Sure, but let me not focus on the regulatory side. I think, first of all, if you're asking about DeFi, I think what we've seen is actually a 12 to 18 months of extraordinary developments. And what we've seen is actually sort of the development of truly revolutionary concepts that DeFi represent that is very, very different than what the financial market infrastructure in the financial market has. And at the core of that are maybe two things. One is sort of self-custody of your wallet infrastructure that you then make decisions on as an individual interacting with these protocols. And the tooling around that has gone through different phases and has reached good levels. There's certainly more work to be done. But secondly, the core concept of the protocols, which Niels was referring to, is there's network liquidity, which hasn't been something that actually sort of peer-to-peer provided liquidity that hasn't been part of the traditional ecosystem before. We are seeing sort of P2P provisioning of loans, which are part of the lending protocols, and all sorts of different other engagements that actually individuals can do to actually provide services in this case. And I think what we've seen is that it's been battle proven at this point in time that these new concepts have been adopted, that players are seeing them as relevant. The volumes speak for themselves, that we've reached partially $80 billion in network liquidity sort of across the board. It is taking a shape and form that people are taking notice from the traditional world. So will they continue to be the way that they are today? Maybe, but I think what we're seeing is that core elements have proven to be something to extend and maybe to build further on. And the next phase is going to be interesting, how this ecosystem that has been obviously driven by crypto-focused early adopters crosses the chasm into something that is much higher volume, much more mainstream, et cetera. So it's an incredibly exciting phase where I think we've reached good sophistication levels, and it's proven by sort of adoption across the board. But now it's the question is actually, how is that going to really extend into the broader market?
Yeah, sounds very exciting. Anybody wants to add something? Fabian, Simon?
Yeah, from my side, I go first maybe. From my side, being in the retail banking sector for a long time, I see it's very exciting because DeFi is the disruption in my point of view that all the fintechs in the retail sector have been talking about for years, and where all the money goes. And by fintechs in this case, I mean legacy banking fintechs. And so far in the past, it has all been about payments. It has been about user experience. Yes, there are some fintechs that heavily worked on processes and cost cutting measures, but there wasn't any new product or any disruptive measures. And DeFi is exactly that. So the idea of getting rid of the intermediary in the long run is a totally new concept. And this hasn't been really realized by retail customers, of course, yet, except for tech savvy and crypto savvy. And we are not right now at a point where, as well as Philip said and Niels, where we have some adoption in tech savvy and crypto savvy retail customers, but the real Kickstarter now is the institutionals, and that will then come back to retail customers in the future. So as well, it's I think it's a big attack also on not only on the legacy banking system, but also on the fintechs, B2B and B2C, that have so far worked in the space. And at some point, these companies will have to realize that they have to incorporate DeFi, and then it will get to the retail customers very soon, and then you have real value also for retail customers.
Actually, I would largely agree, but on the other hand side, who actually is using DeFi at this point of time? You know, this is something people questioning themselves, and also I'm questioning this myself. Who is basically injecting all these billions? I would expect that it's private funds, private people who have some decent wealth, right? Who are moving money around, you know, thousands of individuals. But are we already ready for mass adoption, right? Are we ready already, or does it take more time? We also see some frequent hacker attacks, right? And on the other hand side, as the normal retail person not being into crypto, right? So this person might not necessarily speculate. What's the benefit for this person, right? I do see investment cases. I do see benefits for those people in crypto. That's us and so on. There are huge benefits for us. But those people not in crypto, right? Where is the benefit for them? Who is using DeFi at this point of time? Or am I wrong? And I'm a little bit too pessimistic here. Deals, please.
Well, right. I can, and that's from my, you know, let's say from my personal environment, right? So you can imagine I, you know, speak a lot about crypto, and not everyone's interested in crypto. But when people are interested, is at the moment in the traditional financial environment, with you know, negative interest rates and so on, for private, but also for companies managing, you know, some decent amounts of money, being exposed to negative interest rates, for instance, or zero interest rates, is a big problem, right? And if they hear, well, there is an alternative, and you actually don't have to manage, you know, necessarily private keys and so on and all the complexity, there is an alternative. You can open up an account that's denominated in stable coin, and in the back end, let's say, it invests in DeFi lending protocols and lending markets, and you actually make an interest of your savings. That's really bringing back the savings account to retail, but also to companies, right? So that let's say savings account aspect is something that very often people respond to very well, right? And they are not interested in DeFi. They're just interested in, well, what do I do with my savings, right? And I can't do much. I have to invest in equity or something else. And here you actually have a savings account that haven't been existing for a long time. And that's just one aspect that I personally feel people in my environment, you know, respond to very well, and are open to also, you know, to a certain extent, maybe experiment with that new type of account that's not necessarily offered by a bank, but by another institution.
Okay. I'll just layer on top of that quickly, because I think it's incredibly important to understand the success of DeFi, or anything that DeFi resembles, is going to come when you no longer speak about anything blockchain or mention the word DeFi or anything. It's just about the convincing arguments that Niels was referring to say, here's a material thing that matters to someone, negative interest rate here, interest there, and I can just use it like I'm used to on normal infrastructure that I'm as a consumer I'm used to. So nobody needs to know anything about what a wallet is, or what a private key is, or what Etherscan or you name it is, right? Those things don't matter to people. What matters to people is actually the convincing benefits resulting from the products. Now, we have some ways to go there, don't get me wrong. And that's part of this new transitional moment in this time, where, you know, it's about merging, you know, real institutional investor, you know, infrastructure with, you know, this new programming platform, where the result is that we have all these assets that and protocols that themselves become programming language. And I think that's the real revolutionary moment versus the traditional banking system, which is very much siloed. And yes, there's some connective tissue with the fixed protocol or other protocols between the banks. But the reality is, you don't have the ability to program assets the way that you can if you really, you know, understand what DeFi means. And the second piece then is that you then end up with an ecosystem that, you know, basically is the fintech that we always hope to be. I mean, reality-wise, actually, like Fabi was actually referring to, the fintechs of today are just, you know, sort of hacking the banking infrastructure of today, but basically just building a new UI on top of it. Here's a real opportunity to really revolutionize and transition over into a new infrastructure, things that so far weren't really possible. So it's not about like, you know, zero fee trading of stocks, which exists today, but it's about, you know, possibly that I, as a person, I can hold a stock and maybe lend against it the way that I do that on Compound. And, you know, it's at reasonable rates. It's you know, there's no, you know, fixed term that I have to be subject to. I can do that anytime I want to. And obviously then technology plays a role supporting me in that decision making. That's a very, very big vision if that all comes together that way.
Okay, yeah, makes very much sense. You know, you just mentioned the word vision yourself, so we are not there yet, right? So that's the time to come. But Niels, you just mentioned, and in case somebody would like to have a savings account, and he does not want to do anything related to the tech of DeFi, right? So does this person already have somewhere to go now? You know, is there an app out there where DeFi is in the background and in the foreground there is like a boring app with your bank account? Is this can you mention some names?
No, there are a number of offerings already out there which really abstract away all the, you know, the complexity of DeFi or crypto for the user, right? The user may give away, you know, let's say the aspect of owning, you know, crypto through the private keys, but, you know, retail users, they don't really care too much about that. They trust, you know, the institution that they hand over their capital, right? So there are a number of offerings out there, you know, say BlockFi, which is US centered. I think there is Nexo, another company that's actually based in Switzerland, I think, and regulated by the UK authority. There is Swissborg is another one to mention, but there is also the other ones, Gemini, which have interest-bearing account offering next to, you know, their just exchange offering that they have. So there are a number of offerings where you really just like opening a bank account, you open an account, you transfer fiat from your bank to the account, and on that account, on that UI, which sometimes are more intuitive, others may still not be that intuitive yet, you then start earning interest, and that's all that you know, the retail user looks for, right?
Yeah, I think there's even more advanced solutions as of today that really also bring banking and DeFi together. I mean, if we look at Nuri, or formerly known as Bitwala, they provide you a banking account where you can deposit your, for instance, your salary and automatically transfer it into Bitcoin, and also earn a interest rate on that by lending your Bitcoin via Nuri. So this, I think, one of the use cases and one of the offers out there that really also aim at a high usability and a very good user experience, where the end user themselves don't really have to be a crypto native that knows how to use and actually integrate your cryptos and stake them, for instance, on a decentralized protocol, because that is also not really a product that aims at mass adoption as of today, because it's very complicated.
Interesting point.
Yeah,
so yeah, please go
I really
ahead.
think what key here is what Philip said earlier, right? Key is that the user actually doesn't need to know about all the complexity of DeFi that's in the background, right? The user obviously is interested in risk aspects of that account. He needs to know it's you know, interest bearing means capital is protected and so on. The user wants to know, is that institution regulated
or is it
somewhere,
trustworthy?
you know, is it trustworthy at least, right? That's more important, yeah. So that those are, you know, the features that the user has to know, but he doesn't need to know about the complexities. And I think when we speak about mass adoption and so on, it will be when actually those offerings, those DeFi offerings or services, are embedded into, you know, everyday products that we use and don't even notice, you know, that somewhere DeFi actually feeds all those products. So that's the point when we actually will have mass adoption, right?
Yeah, sounds good. How far are we away from this, Niels? What would you be your expectation? Half a year, 5 years, 3 years?
Yeah, no, I mean, we see payment, the payment, system being more and more open, or adopting more and more also these channels where for payments, we actually don't necessarily know, that we use crypto in the background. We see now first lending products like, those interest-bearing accounts. And that's all still very early, right? To be honest, we see, offerings that Philip mentioned earlier, Swarm, what they're offering, and still that's all very early. So I think, at least 5 years from now, that we will, need to develop that entire ecosystem further.
Okay, excellent.
I think I'll have a little more optimistic view on this. I think so as much as we describe the current state as, I mean, we can talk about deficiencies here, right? Because it's worthwhile to say, yes, there are security issues, right? We have, it's not just the hacking of apps, but it's also infrastructure that is still, the complexity is sometimes not really that well understood and not that well audited. That's why these hacks partially happen, right? But it's also about the tooling being so far too complicated, as we just discussed. But we have done extremely heavy lifting as an industry in the last 24 months, which might not be so visible to the open eye, which is, number one, it's about like what I describe as tooling, right? So wallet infrastructure becoming more sophisticated, people becoming more sophisticated in using it, sort of data transparency being there, but also regulatory clarity is coming together. It's not fully there yet on a global scale, but let's recognize that actually, when I started in 2016 and 17, there was nothing. There was no clarity whatsoever. It was for an entrepreneur like myself, it was a huge risk to bet on a certain jurisdiction and say that's going to be it, right? And yes, we were all riding very hard to the wind on that front. I think as of today, at least we have statements by different regulators globally that actually say, now we're prepared to take you by the hand and accompany you in that journey to bring this all together. And there have been also more clarity in what they expect not to be done, right? So I think that all adds together, which, I would say is more a Cambrian moment where, I think the explosion of the next 12 months is going to be a little more, faster than even the last 12 months. Because these elements are now there, that big Lego pieces can be put together in interesting offerings. Now, it's still going to take time to absorb those offerings by the user, but I don't think that it's maybe, it's hard to predict what in 12 months time the product landscape is going to look like. And maybe it's even disrupting the disruptors in terms of the fintechs by actually offering things that so far couldn't be possible.
I would largely agree on this. I have 2 points. I think you also have to differentiate between markets. So I don't think it's a global market. I think it's you have to differentiate if you're in Europe and, for example, in Middle Europe and Scandinavia, or in South America, the US, India. For example, in Middle Europe, or at least in Germany and the surrounding countries, I think it will take light years for the adoption, because the customers, the retail customers in banking have a totally different mindset than, for example, in Scandinavia, where you have largely, you don't have any cash anymore. You're just paying with your app and your smartphone, where in Germany or Austria, Switzerland, I think it's the same thing, France, you have the bank as an institution. There's a lot of trust. You never change the bank. Half of the people don't even know what they pay for their accounts. Okay, so it's a lifelong relationship. Then in the US, people are brought up from a young age with stocks, so they already know what risk and return is, and they are more stock savvy. So they are looking more for returns, whereas in Middle Europe, you're looking for, just get my money somewhere safe. I don't care too much about a return, and I want to build a house at some point. In Southern America, you have the issue of accessibility and a very unstable currency. And in India, it's probably the same thing. I'm not really sure about where India is involving. So I think you have to also differentiate in which markets you are, and you also have to find solutions for those certain markets. And you can't really put the same solution over every market. That's one thing. And at the same time, I think you have to. I agree with that one of the barriers is that the user doesn't have to see what's happening behind the front end, but at the same time, you still have to tell him what actually the advantages of DeFi are. So you have to find a way somewhere in between, not overcomplicating it, but you have to tell them, look, it's peer-to-peer. You don't actually need the trust of your bank. And you can lend money to somewhere without asking, or you can borrow money without asking any bank anymore. Yeah, you have to find the middle ground to make the tissue between centralized banking or traditional banking and the decentralized banking thinner, and then you're getting there. And I think this can take 15 years in Europe and only 5 years in the US. But yeah, I think it's a regional aspect as well.
Okay, let me summarize this at this point of time, if I get it right, because what you have said, and if I try to aggregate it, then the following comes out. Yes, we have some efficiency gains. We can do things at a cheaper position. We can do it much faster around the world and so on. So we are gaining efficiency gains. That's the world for Germany and for, let's call it, developed countries, right? But in those countries where we are underserved with financial services, then it's not just about efficiency, it's about enabling something which has not been there yet, right? You can use Bitcoin in Venezuela, which is a better currency, better money than the local inflating currency, right? And then what you mentioned, Niels, is very important. It also fits into here in case we have a couple of years of negative interest rates, then you do have a benefit because the system has some issues, right? You do have a benefit for customers. Customers would then like to onboard to DeFi solutions because 3% is more than minus 1.5%, right? And to conclude this, the question would now be, is what we are doing here, this technology, crypto and so on, is this a technology which is solving issues which has arisen in not functioning or not working or badly working financial markets, right? Because this is how it feels like this. When do you need blockchain, crypto, and so on? In case there is no system, in case there is a corrupt system, in case there is a bad system, in case there is inflation, and so on, because then crypto with all its aspects, right, can promise something for people which they don't have. Does this make sense, you know, like as an overall hypothesis?
I mean,
I wouldn't necessarily.
Niels, please.
I wouldn't necessarily say it solves issues that arise in dysfunctional systems. I think in general, and you said crypto now, but if we move to DeFi again, which is part of crypto, in general, it just offers services that we have used in traditional banking already, but it offers these services in a different way, in much more efficient, as we have said, way, and I think that's just, you know, the main value proposition of DeFi. And then crypto, if you look at crypto and say we do have now different means of actually doing monetary, you know, policy in countries where you know that is dysfunctional. I think that's just a different topic, which is not necessarily, you know, the DeFi topic, right? If I can say it that way.
Good point. Who wants to add something?
Yeah, I was going to say that. So it's not about something being dysfunctional. I think the current banking system is, you know, is a very siloed ecosystem, right? You have basically very verticalized stacks of technology and institutional sort of, you know, packaging that today is providing, you know, fairly commoditized version of the same products through different institutions. So if you go to unbank, you know, they offer their full stack of the same products that the other bank offers, and that's just what it is, right? And it's basically sort of, you know, at the lowest level is the central bank, and then everything stacks on top of it. Now, the issue that exists in that is that it doesn't have this free-floating lingua franca that actually connects everything together. So I think we have some elements of that. Again, I was mentioning sort of the fixed protocol, which was then the protocol that stitched together different exchanges to speak the same language of what the asset being exchanged on the exchange actually meant. But I think we're at the same moment when data moved from actually sort of databases to then XML, which was then making the data self-descriptive. I think we're moving with DeFi to that same level, which means I don't see DeFi as crypto only. I see DeFi as a programming layer that can help banks interact much more efficiently with one another. And that then has the ability to create new like meta products that so far couldn't exist because they were forced to be in one organization, not across different organizations, right? So I think what the result is that we're trying to like make the market more efficient as a result of it, where it's truly a marketplace where, you know, the best rates for borrowing and lending are being provided. And the fluidity actually on the consumer level is to make decisions based on whatever the marketplace offers at that point in time. So we're making it more flexible, and that's where the market then becomes more efficient. And the convincing arguments are that the market benefits from those benefits, either in higher interest rates for savings or lower interest rates for lending or for borrowing. And, you know, I think that's where it's going to lead to. I think the banks themselves, they recognize this too. I mean, there's a reason why people have brought attention to DeFi. It's not because of crypto lending and stable coins. It's because they see that there's a real innovation happening there that is, you know, developing quite fast. Let's be honest here, right? And it's not just a number of geeks that are doing this, but we're seeing this actually happening across the board with institutional investors that are then using lending in a zero and negative interest rate environment to lend against stable coins. That has nothing to do necessarily with Bitcoin and other crypto assets.
Fully agree. Who would like to add something? Simon, Fabian?
Yeah, I think what should be also seen, and I think there's something what you also briefly mentioned, Philip, is that DeFi as of today is always connected to crypto, or very strongly connected to crypto. But at the end of the day, we can basically bring any asset that's there in the world in a DeFi environment. And I think that's where it's getting really exciting, because of course for public capital markets, that's maybe not so interesting because they are very efficient as of today. Of course, they would also benefit from more decentralization, and they will certainly in the next 10 to 15 years. But I think in the meantime, it's very interesting to bring the whole private capital markets on chain, because this is a market that is very exclusive as of today and also highly illiquid. And if we were just thinking that, for instance, I could borrow parts of my real estate to someone else, there's like so many business models and use cases that we don't really think of as of today, but that are technically and also regulatory possible as of today. And I think at the end of the day, it's just about to make these business models and these products accessible to everyone with a very high user experience, of course, in a regulated environment. And I think that's where actually, besides crypto, is actually for me personally at least, the big game changer through decentralized financial applications.
Yeah, but Simon, let me just comment one thing. I think decentralization to me is not a self-purpose, right? Decentralization has aspects that then benefit whatever I'm trying to achieve, which means either it creates, a level of trustlessness, where I don't have to trust a single player doing something, or it's just basically because it's more efficient that people don't take much out of the equation, and it gives more flexibility. So I think it's fair to say that like DeFi, the D is not as important as the creativity as a result that can result, from having open infrastructure that people can then use in different shapes and forms, that then lead to much more interesting things.
Well, the D in DeFi takes away some very important gatekeepers, which are blocking innovation here and there, and which are slowing things down, right? Look at what happened with DeFi in combination with peer-to-peer finance, that's basically what we are talking about here, and how extremely dynamic it grows on a worldwide level, because you have taken away a couple of regulators, and you have taken away a couple of legacy gateways, which have to be surpassed in the past, right? I think that's really showing how dynamic innovation can be when you're taking away the gateways and the regulators. I think that's very important, and you're not harming any rules, by the way. You're simply moving to a peer-to-peer model to some degree, and then the regulator is not in charge of doing something anymore here and there. It's now very black and white. It's not that black and white. I know it, but just to contrast it for the audience.
No, but Philip, I mean, I think I fully agree. You have a constant path of accessibility. If you look at the 60s, 70s, if you wanted to be on the stock market, you as a private person, you couldn't be on the stock market. You bought a fund at the shop around the corner, and these guys invested in stocks. And if you wanted to bring your company public, like let's say in Berlin, if you are in Zurich, you couldn't buy the stock in Zurich. You had to travel to Berlin to buy the stock, and maybe later on the stock was also listed in Zurich. So you had lots of arbitrage potential, but it wasn't accessible to private persons. And then this slowly dissolved with e-trading, and that came up. But still, then you couldn't trade any options, because for underwriting options you need, or for buying options you needed a lawyer to set up the paperwork. And then this slowly dissolved, and now we are at the stage where you can actually trade options with your smartphone and buy stocks all around the world with your smartphone. There's only 2 or 3 exchanges around the world that really offer stocks, and before it was in every city there was a stock market. And this is what we are experiencing now, is one step further even from this age, because now we are canceling out the exchanges, the rest of the lawyers we need in between, and also the banks. So it's a puzzle towards, or it's a puzzle piece towards in the process of accessibility of financial markets to every person around the world at the same time, and peer-to-peer. I wonder what comes next, because there's not too much happening after this if it's just peer-to-peer, but it's a slow, long process, and it's I would say it's every piece fits perfectly together to the next piece.
Yeah, and just I think you're describing it the right way. It's basically collapsing the stack, yes. Right?
Yeah.
You're basically taking 5 layers of interactors that basically produce, cost and time delays, and you're collapsing it into a single source of truth, which is actually a single,
right.
An instant settlement that actually everyone has this single source of truth that is on chain. And that has its benefits, right? It has its benefits in speed, it has its benefits in cost, it has its benefits in actually the way that you can program it. And still, you can hold true to the regulatory requirements, which, I think often is misunderstood, that, we are creating an ecosystem that is trying to hack the existing regulatory environment. Quite to the contrary, we're trying to actually almost like put it on a better footing, because let's not kid ourselves, the existing regulatory work that is happening in the financial markets may not be as perfect as people sometimes perceive it, because of a lot of the intransparencies, a lot of the question marks of understanding the interplay between 2 organizations that don't really allow to, for example, know who's holding my stock if I'm an issuer. That is something that is really opaque to the issuer today.
But the worst about the regulation, to just jump in there, is I believe it actually hinders innovation, right? Because if you look at traditional financial institutions, you're always so concerned about not being in compliant with certain regulations and so on, that you actually can't really innovate anymore, right? And that's what happened here. Is an entirely new space where we didn't think about regulations and all of these aspects, right? There was nothing to be compliant with any sort of regulation. So we had just this playground, and still have, and I think that will also continue to be the case, still have that playground where we can just develop all these ideas freely without being in the risk or being afraid of being not compliant with regulation anymore. And I think that's another very important aspect of DeFi that we usually don't speak about. And that's actually, DeFi, I always think of DeFi as the coordination of capital. And then another important aspect that actually drives innovation and everything that we have developed in DeFi is actually the coordination of people, right? And the innovation there is the DAOs, as you know, the decentral organizations, which act as a mechanism to coordinate people and develop together in a very informal way these products, these DeFi products that we know today. And I think those DAOs and the idea of a decentralized organization is key to the continued success of DeFi and developing even further those ideas that we see in action today.
And Niels, I think it's cool to actually think of like the liquidity pools to be mini DAOs, because anyone can set up a liquidity pool with the parameters that they think are right and the market should absorb, but everyone else votes with their capital to come in or not, and they can leave the next instance, right? So it's not as formalized as a voting system, but it's basically something that offers a lot of flexibility of people that think that the market should have this or that.
Yeah, for those people who are insiders, that the market basically governs what's happening, right? But for those people outside, you know, they first have to make this step inside to such that the market then can rule. But for the outside, you know, it's still sometimes a closed shop. And this is where one question kicks in coming from the audience. And I think it's a very, very good question. The person asked that once we would like to have more people joining this ecosystem, you know, like DeFi investments, we talked about negative interest rates and so on. And even if we would like to allow solutions where people basically cannot see what's happening in the background, because as you said, Niels, it's abstracted away, right? So how can you still create a trust such that people still want to invest their money because they don't understand it, they don't see what's happening inside. For them, it's not open source because they cannot see it, they cannot understand it, and so on. So what do you see as mechanisms to create trust in such applications without the user knowing exactly what's going on in the background? Is the solution for this regulation? Could be, right? Or are there any other tactics where you can see how you can create trust for people who don't understand it, who do not want to understand it, who don't have time for it, and so on, but still want to get the benefits? Who wants to?
Think,
yeah, I think. Go ahead.
Maybe I take that. So I think what we will see is that a lot of consumer apps actually at the end of the day, let's say for instance PayPal or others, PayPal just as an example, will further integrate DeFi applications into their service offering, and the consumer at the end of the day, they will trust their service provider that provides a lot of services, but also, for instance, let's say lending or staking services integrated into a way bigger ecosystem of services, and the consumer will trust that party, and that way trust can be reached. Of course, this can be also done through a bank or another institution, but I think you need one gateway in order to reach mass adoption that the consumer trusts.
Okay, I'll try to answer from our perspective. Obviously, sort of, I think it all starts with actually sort of, I think trust is the key word here, right? Because it starts with, we have to be organizations that the people understand, right? And it starts by having, probably, individuals that are associated with projects, with maybe companies that people can turn to and say, okay, I know that something's happening there here that I can actually relate individuals to. And then the second layer of trust is then the path that we chose to go down is actually to say, okay, now we're going to take in the regulatory purview and say, we're going to like benchmark ourselves in what we do against what the regulator expects us to do, right? And that's like a certification that helps consumers and institutions gain trust in what we claim as an organization to be. But then the engagement goes even further, because that then requires at least us to actually know who the individual participants in the markets are, because that also matters to the participants themselves. So if you have institutional participants, they need to know who the counterparties are. They're required to know that. So it's all about like doing that, but still preserving whatever we discuss DeFi has. you know, in terms of self-custody and network liquidity and all the good stuff that we talked about, which, you know, you have to sort of find that Venn diagram of overlap that makes, you know, that still preserves that and doesn't kill it off just because you're doing one or the other, right? And I think the real trust will come in when people start to understand what these new types of organizations are, and that they may not be that different than what the institutions are that they are transacting with today. I mean, from a trust level.
Well, you said it right. I mean, what these new organizations are, right? So there are organizations that you can turn to in case something, you know, goes south, right? And so I think that's, you know, the top level, let's say, of the, you know, the trust pyramid, let's say. There are organizations that may be regulated and that have a certain reputation in the market, and that's where some of the people only turn to such solutions that are offered by such organizations. I think there are different levels and probably different risk profiles of people and what they expect from a solution, so they would commit certain amounts of funds to. And if you go a little bit further below, something that's already out there and existing is, you know, you have insurances, right? It works like, you know, deposit insurances, right? So you then don't necessarily need to trust the app or whatever that you commit your funds to, but you trust that the insurance, you know, works properly, right? Which may again be offered by an organization or not. It can also be, you know, on the smart contract level, but you wouldn't even know of that if you're on that level in the trust pyramid. And if you go further below that, and what you see with more crypto native investors, let's say, I mean, obviously you always have that saying, do your own research, right? And you never commit funds to a project that you don't know. But what oftentimes is used as a proxy for trustfulness is the amount of assets under management by a protocol, right? So if the protocol has been in the market for a long time and it actually has, you know, billions under management, it's a trustful project, right? So already those metrics can actually help people to build up trust in a certain offering. Or not, right?
Yep. You mean like Tether?
I think, you know, I think, yeah, well, that's an interesting project, yeah. And obviously, you know, lots of people trust it, right? Because otherwise it wouldn't have.
Exactly.
I'm being a little bit heretical here. Answer that question is, I think trust will come over time if people realize that, you know, can you really trust a bank today when you know that you give your money to a bank, and if the bank fails, you are sure that the legislator will, save it with your tax money. That's what it's all about at the moment. And in the future,
or the deposit insurance, right? Sorry.
Oh, yes.
You have that,
yeah.
Right.
But in the future, what people have to realize is that, for example, the DAOs or a protocol, if a protocol fails or if there's incorrect implementation or a bug, the protocol will fail, the money will be gone, but it cleans itself out. So only the best protocols and the most trustful protocols will survive. And that's coming back to the free market we were before. I think people have to realize that over time, that you can actually trust the protocols more because they don't want to lose your money and they know they're not going to be saved by the state or by legislation versus the bank of today. Maybe it's a bit of a heretical theory, but maybe you can try to build that trust this way.
And it always comes back to transparency, right? There is one topic in DeFi where you see that in the beginning you have Ether, then you are creating DAI out of it. So you're wrapping the Ether into DAI, then you take the DAI and using the Compound or Aave protocol, then you wrap it again and you wrap it again and you wrap it again, right? So this also adds some complexity, which is not really good understood yet. So I perfectly agree with all of you that the code base is open source, but you also have to add a layer of new types of analytics to understand the wrapping of tokens and the increasing complexity which is wired into this entire system by default, right? Fabian, you would also mention at this point of time what you are working on, because there are thousands of DeFi instruments, right? And you're trying to put them all in one box such that you can, at the end of the day, compare them, right?
It's very, yeah, it's very, very complex. So you can almost think of it as a three-dimensional place, or even four dimensions, where you have underlying assets, you have different protocols, you have different verticals, and you don't actually know where you want to put your money, because you have to really research to know where to put your money. And the idea is to really focus that down on single investment opportunities and say, look, I'm investing in a uni token, I'm putting that on Aave to gain yield, versus, I don't know, I'm just buying Ether and putting that on Compound, whatever you think of. And there's so many parameters that play with your metrics. And I think it's really important to put it down on one investment opportunity. And then you can say, look, I'm having this return expectation and this risk aversity or affinity, and then there's investment opportunities are boiled down to maybe 3 or 4 investment opportunities, and you can really benchmark those by metrics, traditional metrics. I think that helps the institutional investor to get into the market and understand it better and take the complexity out of it, but still show them what's happening, and make it accessible.
Via smart, transparent analytics to compare things, right? Talking about institutionals, maybe Simon, Niels, and Philip, there are 10,000 institutional investors out there in any countries, asset managers, insurance companies, pension funds, banks, intermediaries here and there, transfer agents, and so on. Who of these types of institutions, as I said, 10,000 of them worldwide, who of them do you see being interested in this space? Maybe even not just being interested, but also investing a little bit in the space. Is it are there specific patterns? Is it dependent on the people working there? Is it depending on the type of business model they have? Is it is it modern family offices investing there and not so much large scale banks? So what patterns do you see in the institutional world who is becoming interested right now? Because I think, the interest is there, but there might be some dozens companies being interested, maybe some hundreds, but 95% are still outside this playing field, right? What's your opinion here? Philip, you would like to start?
I think that's a perfect question for Philip, isn't it?
Yeah. So let's say, for example, there's different categories, right? I think, first of all, let's start with crypto, because that's obviously the predominant, use case that a lot of investors or investment companies are being exposed to more and more. We saw the Spezialfund, jurisdictional change in Germany, for example, where, now certain funds can actually put up to 20% of their holdings into crypto themselves. That's just a flavor of other organizations that have already started to do this. They started off by the fund managers themselves doing that on a personal level. Then it started by some customers asking them to do that on their behalf or add it to the stack. So we see a lot of funds that are not just crypto focused funds that are starting to engage in resulting maybe from the negative interest environment, but also just from just interest level to engage there. So for them, it's always how adventurous are they? And it started off by, okay, we're just going to use the trustless layer and that trustless narrative to actually engage. It's now coming to layers of people that actually have rigid compliance requirements that are still bystanders in some ways, that need something on the other side that they can trust, that works the same way that they work. And so interest level is very high on that side. It just is, it's a progress path that we need to take to actually make it compatible with those kind of organizations. The second piece is, I would say there's a lot of efficiency gains that some organizations have realized. So, some of the big, huge custodians, not crypto custodians, but huge custodians that effectively know that if they operate on a blockchain-based technology layer, that they can service their customers in a much more efficient way. So, people that actually do fund management for most of the funds in the world, they're working obviously on different, permissioned or permissionless infrastructure layers to make that, also a much easier to manage and much more transparent infrastructure for them and their customers. That always then pegs the question, how do you then actually bring that into a meta layer that can transact amongst those organizations or amongst other types of players in that front? So that's where DeFi comes in, because then as much as you then actually have a captive layer, a captive chain, that always needs to talk to other things. And that's where sort of the marketplace comes in, right? I do, however, think that on the banking side, there's some adventurous players, like retail banking side, there's some adventurous players that is going to take far longer to actually materialize. So actually that path is going to come through payments providers that are sort of going to link over into this world and maybe extend their businesses into this. So we've seen this with PayPal, we've seen this with other players that have added crypto features, where the individual retail user asking for these is going to drive those organizations to do more in that space.
Interesting. Yeah, excellent point. We are close to be finished at 12 o'clock. Who of you guys would like to add something as a closing remark, maybe also on the latter question?
I think we discussed one question that we didn't discuss here. I found kind of interesting. You were asking before, will banks still exist in 15 years? My answer is yes.
Yes, of course. Yeah,
of course.
Yes, of course. But banks as a category, yes. But the question is, will it be those banks which we know today, or will it be new banks? And how will these banks look like? Will it be the same personnel, or will it be different personnel? Might there be more technicians and less business guys? And what is the importance of IT knowledge, code bases, and so on? So banks as a category will of course exist, because the government needs something to address to, right? But I think the banks we will know in the future will look entirely differently as we know them today.
I would even add,
rather fintechs
much more
licenses.
focused on their customers than they are today.
Yeah.
Which means if you as a customer have the individual decision making to move instantly from one to the other offering, then it's all about, is that offering more trustworthy, better in servicing me, or just in a cheaper way, or in a much more effective way. So I think the marketplace will look a lot more dynamic, and those banks will survive that know that that's coming and that will prepare for that. Whether they're active participants in one layer or the other, it really doesn't matter.
Yeah, interesting point. Let's make this topic the entire topic for the next panel in 2, 3, 4 weeks.
All right.
All right.
Thanks very much. It was a very interesting discussion with 4 DeFi experts, right? I hope you enjoyed it, everybody out there. And yeah, let's continue the next time on a slightly adjacent topic on this. Thanks much, and thanks you guys for being here. Thanks.
No worries.
Thank you so much.
Philip.
Thank you very much.
Bye.